What's up, guys? This makes the market open. Relatively short morning. We had the market's kind of choppy. Look at this chop fest over here. We didn't even really know which way it was going to go. So there wasn't really a lot that I had on my radar after I saw the market kind of go sideways for a while. A lot of the things that I expected to go up kind of just chopped sideways, and some of them dropped. One of the only consistent gainers this morning was Under Armour. As you can tell, it was actually one of my first trades. First trade I took was at 936. At 936, let's see here. So Under Armour was gapping up on earnings. It has a moving average up here at 1565-ish. Let me show you guys the daily real fast. Bam, right there. Actually, no, that's the previous high. That's what it was. So it was a previous high. So it stands as resistance for the stock. So as you can tell, it actually hit it to the T. So sometimes people tell you technical analysis is mumbo jumbo or voodoo or something, but I mean, shoot, look at this. It literally hit the previous resistance right to the T. So, but anyways, so I took it long over the first 5-minute candle with a stop down here at 1465. I took 300 shares long. I was thinking about waiting for the whole 15 mark, but I didn't. So I just hopped in right before at 1498. I got out 200 shares at 1535, and then another 200 as it was coming down at 1530. Ended up making, I believe, right around $100 or so. I could have gotten 2 to 1 on it, but as you can see on here, this candle actually popped up really fast, and I don't know if I would have even been able to take my profit up there. But I knew that there was a moving average up here, so I didn't want to be greedy, so I just took my 1 to 1 instead of taking the 2 to 1. Then the next trade I took was a short on HSIC. It was gapping down this morning, so it's like a gradual fall basically. And as you can see on here, it fell right off the bat, straight from 65.50 all the way down to 63. I was very, very tempted to take it at the very first candle because it was such a gradual fall during pre-market, but I didn't want to chance it. Better be safe than sorry. And so I just waited for the pullback. As you can see on here, it actually pulled back, and then it started bouncing up here. It climbed up over VWAP and it kind of stayed, and it started bouncing. Where was it? 65.50. Yeah, so after it climbed down, after it bumped down below VWAP, I shorted it right within this candle, I believe, so at 952. So my short was actually supposed to be at 64.50, but I accidentally jumped the gun a little bit and I shorted it 5 cents above. And although I would have triggered here in this candle anyways, and it would have kicked me out regardless. During this time, the market was chopping up and down, and it actually climbed back up over VWAP, the 9, and I started unloading some of my position. My stop was actually up here. It initially was at 65.50. Then I shorted another 100 shares at 64.68, so I had 200 shares short, and I brought my stop down to 65.30. As soon as it climbed above 9 and VWAP, I started unloading some of my shares. So I took out half at 64.93, and the rest I got kicked out at 65.21, so I ended up taking a $91 loss. If I would have stuck to my initial stop, I would have lost probably somewhere around $200. So I realized that I was not right as soon as it climbed up over VWAP in the 9, and then I started taking my position away. Because you can take your position away, and if it does end up coming back down to your trigger, you can always add it. But if it never actually comes back to your trigger point and starts going higher and higher, you're going to lose the whole amount. So it's risk mitigation. It's really what it is. You'd rather just add it later and then maybe just lose like 20, 30, 40 bucks than to just lose, the whole $150, $200. So that's a good way to mitigate your risk instead of losing the whole amount. So I took out the whole amount at 65.20. And then the next trade that I took, let's see here, was another trade on Under Armour. As you can see on here, it pulled all the way back to VWAP in the 9. I ended up getting filled at, let's see here, 1527. I believe it was 1021. So somewhere here in this candle. I was waiting for it to pull back. I missed the initial entry here. So I waited for the next candle to pull back. So I tried my best not to chase it. So I actually did end up getting a good fill on this. And we kind of chopped sideways for a while. And then right here, there was a lot of resistance at 1530, but then it popped over. And I ended up getting out at 1542. Oh, wow, I actually ended up making the right call. So on here, let me back out of the SPY. I talk about the market closing the gap every single day with you guys. The market was actually somewhere up, let's see. It was somewhere around here. And I know that the gap was going to close soon. And it was possibly about to start coming down. So I went ahead and took the profits. It wasn't as much as I was risking or as much as I would like to taken out of that trade. But rather to be safe than sorry, I took my profits already and then I was done for the day because I knew that the market's just kind of chopping back and forth and it's just kind of going between this range. If you can see, these candles are very whippy, so they're up and down, up and down, up and down. The market's not really making up its mind right now, and it's only 11 o'clock in the morning. I'd rather just take my profits and be done for the day. So two wins on UA and a partial loss on HSIC, and I am done with that. So trying to stay consistent. I've only had 2 red days so far this month, so doing pretty well. If you guys have any questions, make sure to leave it down in the comment section below. Also, give this video a thumbs up if you guys do like the content. Also, make sure to join our Facebook group. The link to that will be below. I'll talk to you guys later. Bye.